front rows. Good morning, ladies and gentlemen, and welcome to the AGM for Tasfoods. Thanks for all for coming today on this cold day outside. We really appreciate your attendance, and for those also watching on the webcast, the year has come around very quickly. It doesn't seem that long since we were here last year. I'm John Murphy, the company's chairman, and I'll be chairing the meeting today. Please ask everyone, if they haven't already, to ensure your mobile phone is turned off. That'd be great, thank you. I'm advised that we've complied with the relevant requirements for convening the meeting and have a quorum is present, and therefore I declare the meeting is open. I'd like to start by introducing my fellow directors. On my far right there is John O'Hara. Please, John, announce yourself. Is the chair of the Nomination and Remuneration Committee and a director. And also a fellow director, Ben Swain. Ben is a non-executive director and chair of the Audit and Risk Committee. Also, I'd like to introduce members of our management team here today. If they could please stand, and as I mentioned their names so you can recognise them. Starting with Scott. Scott Hadley is the Chief Executive Officer. Josh Fletcher is our Chief Financial Officer. And Tristan Nichols is our Poultry Agriculture Manager. It's great to have them here today also. Also like to welcome Brad from PwC, Brad Peake, and Caroline who is with us today, the Senior Manager for Price Waterhouse, our audit partners, so if they might just want to stand up. Thanks guys for coming down today to be here as well. And they'll be available to answer any questions you have as well. The notice convening this meeting was sent to all shareholders of Tasfoods Register on the 28th of April 23 in accordance with the Corporations Act, and unless there is any objection, I will now take the notice of meeting as read. All valid direct votes and proxies received have been recorded and audited by Link Market Services. These will be reported upon separately for each resolution and advised to the ASX later today. Open proxies in favour of the chairman will be voted in favour of each of the resolutions 1 through 3C. The minutes of the annual general meeting for last year are available for anyone who wishes to have a look at them. So the order of proceedings for the meeting will be as follows. We'll begin with the chairman's address, in which I will review the Tasfood results for FY22 and its strategic direction, and this will be followed by a presentation by Scott summarising the company's current trading and the strategic objectives. The meeting will then consider the following matters as indicated in the notice of meeting: to receive the accounts and reports for the year ended the 31st of December 2022, to vote on adopting the remuneration report, to vote on the re-election of Ben Swain as director, and to vote on the granting of share appreciation rights for directors, myself, John O'Hara and Ben Swain. Voting on the resolutions will be conducted by way of a poll. Throughout the meeting, shareholders and proxies will have the opportunity to ask questions or make comments on resolutions. In order to do so, please raise your hand, wait for the roving mic to come to you, and if you can state your name and hold up your polling sheet so I can see that you are a shareholder or proxy holder, and direct your query to me and I will answer it or direct to the appropriate person. Shareholder questions received prior to the meeting will also be addressed at relevant points throughout the meeting. I'll now move to the Chair address. As announced at our AGM 12 months ago, our immediate priority for 2022 was to strengthen the foundations of the business and to capitalise on our competitive advantage in Tasmania. This position would enable expansion into new categories and markets, leveraging our core capabilities across production, marketing, sales and distribution of high-quality food and beverage products. Significant progress has been made in the 12 months on all aspects of the business to simplify, streamline and enhance our operating model, delivering improved speed, execution and flexibility notwithstanding the extremely challenging market conditions we faced. In the first half of 2022, the company completed a very successful capital raising of $5.5 million placement, followed by a 0.5 million share purchase plan to fund the initial stages of the company's rebuild plan and working capital requirements. This placement was strongly supported by existing and new shareholders who share the company's vision. Like many food and beverage companies, 2022 saw significant challenges presented by unprecedented global uncertainty, supply chain disruptions and inflationary pressures which have significantly impacted performance. COVID-19 related disruptions early in the year affected both our dairy and poultry businesses, with factors such as labour shortages severely impacting operations and imposing significant additional costs. During the second half of the year, consumer sentiment and spending was negatively impacted by the upward momentum in inflation and consequential impact on interest rates, leading consumers to shift to private labels, value-based products in our core grocery channel. This has had a significant impact on our volumes sold and profitability, despite the significant price realisation, cost reduction and supply chain initiatives we put in place through the first half of the year. It is testament to the strategy implemented in early 2022 that the company was able to deliver a like-for-like net sales growth of 26% in the first quarter of 2023, despite the challenges faced. I'll make some general comments overall on the 12-month results, and Scott will provide more commentary and detail on trading and performance in his address. Despite delivering a solid sales performance of $70.6 million, up 1.6% on prior year, we recorded a disappointing group operating EBITDA loss of $7.3 million compared with the prior year loss of $4.7 million. This performance, coupled with subdued forward-looking industry forecasts for the categories we compete in, has resulted in the company recognising an impairment charge of $6.8 million. This comprises brands and trademarks of $2.9 million in the poultry business and $3.9 million in the dairy business. Due to the market uncertainty, we've adopted a conservative approach to the underlying impairment calculations, and the adjustment does not impact the company's cash flow position nor its future trading potential. As a result, the company delivered a net loss after tax of $16.5 million. At year end, the company held $0.4 million in cash and $3.3 million of undrawn capacity in debt facilities. Net assets at 31st of December 2022 were $18.3 million, representing 4.2 cents per share. As the company set out in its strategic review, the board and senior management continue to review our capital management framework on an ongoing basis. Within that framework, we have made key decisions to exit the organic poultry operations, along with the sale and leaseback of non-core real estate associated with Better Mill. We're committed to being accessible and transparent with the investment community and have increased engagement across investor meetings and briefings. We will continue to report to investors against our strategy and key initiatives as things evolve in this challenging environment. We regularly review the performance and effectiveness of the board and also the membership of the board to ensure the members possess the range of skills, knowledge and experience to deal with the current and emerging business environment. At this year's AGM, Ben Swain is seeking re-election to the board, last elected in 2020, and you will hear from Ben as we move to the formal part of the meeting. Ben is a highly valued contributor to the board and adds significant skills and experience to the Tasfoods business. The board reviews the company's remuneration approach on an annual basis to ensure it is fit for purpose, considering the relevant market practices and circumstances of the company to retain and recruit the very best talent. This informs the setting of short and long-term incentives aligned to growing EBITDA performance and share price performance. As outlined in the remuneration report, the EBITDA hurdle was not met and no short-term incentives were paid in 2022. The board believes that in the interest of shareholders for executives and directors to receive part of their remuneration in the form of at-risk equity that vests based on performance indicators that are linked to shareholder benefit. Consistent with last year's AGM, included in the formal part of the business of today's meeting will be resolutions seeking the issue of share appreciation rights to directors in lieu of a part cash component of director board fees. As we round off FY22, I would like to welcome Joshua Fletcher, as you met earlier, to the role of Chief Financial Officer and Company Secretary, and to thank Shona Croucher for her significant contribution to the Tasfoods business. Shona joined us during an extremely challenging time for the business and has not only managed our financial reporting and operational objectives, but ensured a full and robust handover to Josh to ensure no disruption to the group. Josh brings significant experience in relevant industries to the business and has really hit the ground running. So whilst we face challenges, 2022 was a transformative year for Tasfoods. We've made significant progress in right-sizing and streamlining our business operations whilst exiting unprofitable business units and supply agreements. Whilst the historical financial performance is not where we want it to be, we have seen our extensive operational improvements starting to come through in recent periods. As a board and senior management team, we are cognisant we have further work to do to ensure sustained success. However, we remain confident that our strategy outlined in early 2022 will realise future benefits for shareholders over time. Given the prevailing economic conditions, we have accelerated our approach to reducing the near-term operating cost base to ensure a leaner operating model. Included as part of this review, we've looked at our go-to-market approach, narrowed the focus on our business development priorities, challenged all aspects of our brand and product portfolio to return Tasfoods to profitability in the shortest possible timeframe. We continue to develop new market opportunities with initiatives in digital, online direct-to-consumer, along with deepening relationships with strategic customers and exploring new markets. Since the implementation of our strategic roadmap, the board and senior management continue to actively explore and assess our strategic options, challenging every aspect of the business portfolio. Through this, we continue to explore and review all potential strategic initiatives, including partnerships, vertical integration, complementary asset utilisation, and divestment options. We will continue to review any opportunity through the lens of ensuring enhanced returns to shareholders. We will also continue throughout the year to report against our strategy and key initiatives of the business. On behalf of the board, I'd like to thank all the staff at Tasfoods that have shown and continue to demonstrate great resilience despite the many challenges faced by food and beverage companies in the current market environment. The board is immensely proud that the people of Tasfoods always strive to deliver outstanding products of the highest quality. I would also like to thank my fellow board members, Scott and his leadership team, for their commitment and significant efforts this year. Finally, I want to thank all our shareholders, our customers, our suppliers and our partners for your continued support. Thank you. I'll now, prior to handing to any questions and taking those as we go through the meeting, I'll now invite Scott to first address the FY22 results and how we are tracking so far in FY23. Thank you.
Thank you, Chairman, and welcome everybody. We've reviewed and refreshed the company's strategic plan, and our immediate priority for 2022 was to stabilise the foundations of the business, to then be in a position to leverage our core competencies for future growth. Despite market challenges outside our control, we achieved a substantial amount during the year. We made significant changes to all aspects of the business, with the board and senior management working together to simplify, streamline and enhance our operating model to drive superior execution whilst providing greater speed and responsiveness as market conditions evolve. We've reduced the number of brands and SKUs significantly that we offer to the market to ensure a focus on profitability, not growth for growth's sake. To complement this, we have also increased our e-commerce capabilities and continue to evaluate alternative channels to market. To lead Tasfoods, we have restructured the leadership team to have a laser-sharp focus on operational and financial performance while building capability to implement our key initiatives. This updated structure drives greater levels of accountability and performance of each division. The team is working hard to drive the future performance of Tasfoods, and we are looking forward to the challenge ahead of us to turn Tasfoods into the business all our stakeholders aspire it to be. Against a very challenging external environment in 2022, we have made significant progress to simplify and strengthen the foundations of all our business divisions, with numerous initiatives implemented. Unprecedented input cost rises during the year in milk of 30%, poultry feed of 15%, cream 13%, COVID-related labour 400,000 and distribution costs of 21% increase have weighed heavily on the 2022 financial results. In order to improve efficiency and effectiveness of the business, some of the initiatives we've implemented include a significantly reduced SKU count in all divisions to simplify our operations and eliminate loss-making products. We have implemented a price rise process to combat the significant increases in input costs and maintain margins. We've reduced logistics complexity through changes in our operating model and implementing minimum order quantities and freight recovery initiatives to ensure all delivery routes are profitable. We've implemented forward purchasing and hedging policy, particularly focused on the key input of wheat. We have exited loss-making operating divisions in organic poultry and goat's milk products, where we have identified negligible growth opportunities. We've launched a new e-commerce platform, Box of Love, to further diversify our channel strategy outside of grocery. Our new talent hired very selectively in key roles have made significant impact on the performance to set the foundation for future growth. As the Chairman mentioned earlier, at the beginning of 2022, the company identified the top 10 foundation building strategic initiatives that would underpin the future of our business. This agenda has moved forward, with the majority of the initiatives now having completed the design phase and are now being implemented to realise the full benefits. It's a multi-year program that will deliver significant benefits over time. We are now in a position to capitalise on our strength in our home ground of Tasmania through delivering a positive financial return that will provide us with the foundation to aggressively expand our interstate and online offerings. As we execute on this strategy, we continually assess opportunities in adjacent categories that may fit with the strategy of Tasfoods' premium authentic business. We believe that Tasfoods will present as an attractive platform to potential brand partners, and we will continue to look to add to our portfolio in the right categories that fit with our supply chain risk profile. As we have unrivalled distribution network in Tasmania, we have started to leverage for growth through partnerships such as the Juice Guys and the Other Way. We believe that delivering on these initiatives will put Tasfood on the right path to profit and sustainable return to shareholders. Sales revenue growth of 1.6% to 70.6 million was achieved in 2022 when compared to 2021. Sales growth in the poultry division was 1.9%, was solid given the SKU rationalisation and discontinuation of organic and ethical free-range offerings. Sales in the dairy division were largely flat on last year, whilst EBITDA was impacted by the delay in passing on significant milk input cost increases to customers. Pinegarner dairy products, including the Farmgate and Cafe, were a highlight in the dairy division, with sales increasing by 8% compared to 2021. E-commerce sales increased significantly by over 200%, albeit off a very small base. Gross margins for the year were significantly impacted by input cost increases associated with milk, poultry feed and labour. The majority of these costs were passed on to customers throughout the year. However, the speed and frequency of cost increases ensured full margin recovery was not achieved in the period. The performance in FY22, coupled with subdued forward-looking industry forecasts for the categories that we participate in, resulted in the company recognising an impairment charge of $6.8 million, comprising an intangibles impairment of $2.9 million in poultry and $3.9 million in the dairy division. Minimal intangible assets remain on the balance sheet, and the board view this as the most conservative approach moving forward. The company had cash holdings of $0.4 million at the end of 2022 and total available funds of $3.7 million, including unused overdraft facilities. Whilst the financial result for the year is not reflective of the many improvements to the foundations that we have made, we saw that the initiatives coming through in the latter part of the year and the first quarter of this year give us continued confidence in the future of Tasfoods. FY22 was a transformative year for the company, and we remain confident we are on the right path to improve performance. During 2022, we restructured the sales, marketing and e-commerce areas of the business. Within sales, we focused resources in growth areas such as mainland opportunities, food service in Tasmania and merchandising support in dairy. Through this improved capability and focus, we were able to implement the numerous customer-facing initiatives such as price rises and SKU rationalisation seamlessly, whilst maintaining sales velocity. We acquired new customers on the mainland in both poultry and dairy, while solidifying our position as the leading FMCG business in Tasmania. During 2022, we implemented a range of marketing initiatives to improve awareness of our high-quality products. We invested behind our core brands of Better Milk and Nichols Poultry to drive product awareness and sales. The new campaign for Nichols, Nothing But, reminded consumers of our value proposition of chlorine-free, no added water, pure Tasmanian chicken. Our grassroots campaign for Better Milk was very successful, with over 108,000 entries from 229 participating sports clubs in Tasmania, sharing in $100,000 in cash. This campaign reinforced the Better Milk positioning as being for all Tasmanians and helped drive sales activity. In the e-commerce space, the company has rebranded and relaunched its authentic real wasabi brand, Shima, and initiated a chef ambassador program, partnering with some of Australia's most recognisable culinary identities and restaurants. To better service customers' desire for authentic offerings with provenance, the company has relaunched its premium cheese brand, Pinegarner, through a new identity, online platform and social presence, with multiple award-winning cheddar and blue cheese offerings now available direct to home. Finally, the company has launched its new luxury and corporate gifting brand, Box of Love, targeted at the consumer and corporate gifting market. The online channel delivers curated hampers with extensive selection of food and beverages from Tasmania's finest producers. Throughout the year, our products have won many awards at industry events and shows, highlighting the outstanding quality products we have to offer. Additionally, we have showcased these products at industry events such as Mould Festival and other such events throughout Australia. None of the above initiatives would be able to be implemented without the support of the wonderful team of Tasfoods. We employ over 250 people, the majority in Tasmania, across all our business divisions and shared services. This employment investment by Tasfoods supports the Tasmanian economy by over $18 million, including circa $1 million of payroll tax. This excludes our direct purchasing of milk, wheat and other key inputs, which injects many $million more into the Tasmanian economy. We are proud to be Tasmania's homegrown premium product company. Similarly, we are very proud of our outstanding health and safety record at Tasfoods. Our long-term injury frequency rate, measured as long-term injuries per million hours worked, is 2.1, which is well below the industry benchmark of 8.1. During the year, we had 1 LTI. Whilst our goal is always for 0 in this area, the result is outstanding given the nature of the industries we work in. I'll now give a FY23 April trading update. Overall sales revenue at the end of April 2023 is significantly ahead of last year on both an absolute terms, 11% up, and like for like, which is up 15%, basis, with all business divisions showing an improvement on prior year comparable period. Sales performance in Nichols Poultry has been particularly standout, having commenced the new financial year with revenue up 15%, and on a like-for-like basis, that's eliminating the impact of organic and ethical free range, being a 21% increase on prior year. Strong performances has also been seen in Better Milk, up 7%, Meander Valley Dairy, up 6.5%, Pyangana, up 16%, and Shima, up 17.5%. This is providing confidence that the strategies implemented in 2022 are delivering as intended and providing a platform for growth. Input costs remain stubbornly high, in particular milk and wheat. Milk input costs increased again in February, with the year-to-date cost of milk per litre 26.5% higher than last year. Wheat, the main ingredient in poultry feed, fluctuates with global markets and is 20% higher per tonne compared to last year. These two main inputs, along with cream, labour and transport, have prevented recording a positive EBITDA so far this year, despite strong sales performance. Gross margins have improved by 3% over last year, and EBITDA has improved by 127%. Poultry has been the standout business unit year to date, with gross margins up 4.5% and a positive EBITDA result compared to a significant EBITDA loss last year. Our dairy division has found conditions slightly tougher. Whilst revenue has increased on last year across all 3 business units, milk input cost increases has meant margins and EBITDA for the dairy division remained flat to last financial year. At a group level, all key metrics are tracking well ahead of prior year, and this is translating to a significant improvement in the earnings trajectory. The company remains focused on managing its cash flow tightly, with continued focus on cost management, working capital optimisation, SKU rationalisation, procurement initiatives, waste minimisation, logistics efficiencies, fixed asset utilisation, and maximising our price realisation as we navigate a path to positive earnings. As previously mentioned by the Chairman, the Board and Senior Management are actively exploring and reviewing every opportunity available to us to maximise returns to shareholders. From a base business perspective, we'll continue to look for ways to reduce costs, maximise revenue, and improve efficiency of our assets. A fantastic example of this is our new premium, planet-friendly pet food range under the Island Sky brand. I'll just grab one and I'll see what we're talking about. This is a fantastic initiative by the team, and we have agreed with a national pet retailer to go live in the very near future. In order to utilise more product, reduce waste, and commercialise kilograms that would otherwise go to landfill, we have developed this premium pet food range, and we expect to see positive financial returns from Q4 this year. I think you all agree it looks fantastic, and we can't wait for it to be ranged nationally in the very near future. A lot of hard work has gone into this by the entire team, and we think it's going to be fantastic for the business. Additionally, the partnerships we announced with the Juice Guys and the Outer Way shows we are maximising utilisation of existing assets and capability to add incremental net revenue with minimal capital outlay. These provide only a few examples of how management continue to sweat the company's assets harder to ensure we are maximising utilisation. The company continues to evaluate vertical integration opportunities, particularly in poultry, to not only de-risk our supply chain, but to improve profitability and provide certainty for new adjacent opportunities, such as the pet food that we talked about just recently and other value-add offerings. Strategically, we continue to assess ways to improve shareholder returns through partnerships, joint ventures, M&A, fixed asset utilisation, and divestment across all divisions. The board and senior management will assess any opportunity within our continuous capital management framework. I want to thank all stakeholders for supporting us through these challenging times as we navigate these extraordinary market conditions. Thank you.
Thank you, Scott. We'll now move to the formal business of the meeting. The voting procedure will be as follows. The notice of meeting provides details of the resolution to be put to the meeting, and shareholders will have the opportunity to ask questions and comment on each resolution. Shareholders, proxy holders or corporate representatives entitled to vote, ask questions or speak to a resolution were given a yellow card when they registered for the meeting. Shareholders who have already lodged their votes and proxies or are joint holders have been given a blue card. They are entitled to ask questions. Holders of red cards are visitors and are not entitled to ask questions or vote. I will read each resolution to the meeting, and details of votes received by direct vote and proxy for each resolution will be shown on the screen behind me. I will then ask for questions, after which a poll will be called on each resolution. Please mark your voting paper showing whether you vote for or against the resolution or wish to abstain. At the end of the meeting, voting papers will be collected by a representative of the company's registrar, Link Market Services, who will conduct a review of the poll papers and procedures and count the votes. The result of the polls will be announced to the ASX and posted on the company's website later today. I will now introduce the first item of business on the notice of meeting, which is the receipt and consideration of the accounts and reports. I now formally table the accounts and reports of the company for the year ended 31st of December 2022 and the related directors' report, directors' declaration and auditors' report. According to the Corporations Act and the company's constitution, shareholders are not required to approve the accounts and reports. I invite any comments or questions on the reports or the business of the company, and also remind you that Brad and Caroline from Pricewaterhouse are in the room and present to ask and answer any questions you may have of them in relation to the audit and the audit report, accounting policies or independence of the auditor. I'll now open for any questions. Mike, grab a mic.
I probably need to ask this question of Ben, head of the Audit and Risk Committee. Is that correct, Ben? And PwC would be responsible to you in terms of the audit of the accounts?
PwC, the auditors, yes.
Yeah. I've mentioned this to Brad earlier on that I was going to put a question through to him, so it could be answered by Brad or yourself, Ben. PwC is obviously in the news at the moment for a whole lot of wrong reasons. Given the situation that PwC is at the moment and the issues behind that, I noticed recently that one of the federal ministers that's on the Senate committee is suggesting that in future that government purchasing should be done with a mind to reputational risk or reputational aspects of the auditing company. How do you feel about that in terms of the auditing moving forward, putting that as a provision? And when is the audit due for renewal, the contract due for renewal? Ben, would you like to respond to that?
Maybe I'll just make a general comment before we hand to Ben. He might want to add that PwC, the relation with PwC and with Tasfoods is purely for audit purposes. We don't have any relationship with the tax team or any part of that business.
That. Yeah.
And so we don't, that's for everyone to know, it's completely separate.
Yep.
The audit is conducted completely as we do for the purposes of a company of our size and for the scope that you've seen in the reports.
Yep.
That hasn't changed. We continue to do diligence on the options and using PwC as a stakeholder going forward. We continue to do that in the normal course of business, and we will do that. And we meet frequently to have that discussion. So hopefully that gives some colour that we're not in any way using tax services from Pricewaterhouse. That is an issue for Pricewaterhouse. This is Tasfoods meeting, and we'll handle ourselves in that manner.
Absolutely. And the auditing contract itself, when's that due?
Yeah, we review it yearly.
Yep.
We don't have a relationship where it gets locked in for 3 or 4 years. We sit back and assess performance, and we be very sure that we discuss about how we can work together as two organisations to optimise not only the outcome and get the best result, but also manage cost.
Yeah, absolutely. And going back to my original question about putting a clause in the next call for tenders on the auditing services, would you be open to that idea?
Absolutely.
Yep.
We would do that. The need. We're cognisant of the change in Tasfoods as a business in the market at the moment, and so we will look at that against the backdrop of everything we've got on, and as a business in terms of just the timing and the capacity of the team. So we're absolutely up for that, and we review it regularly, and we will do.
And you would hope that would result in cost savings as well?
Absolutely. We would look at how we can construct the workload and the activities that underpin it, because we want to make sure that you as shareholders get clarity that the scope and the transparency and everything's done completely in accordance with what we should be doing. But we certainly don't go in any way to be other than frugal with the way we spend money.
That's fantastic. Thank you, John.
No worries, mate. Thank you. We have no further questions. We'll now take those, proceed with the remaining formal business in accordance with the notice of meeting. That was only for notification. So first resolution for the meeting relates to the company's remuneration report. Under section 250R2 of the Corporations Act, a resolution must be put to shareholders to consider and, if thought fit, pass adoption of the company's remuneration report included in pages 33 to 51 of the 2022 annual report. This resolution is advisory only and does not bind the directors of the company. However, the Corporations Act provides that if a vote to approve the report receives a no vote of at least 25% of the votes cast, this will constitute a first strike. After the motion has been moved, there will be time for comments and questions. The voting exclusion set out in the notice of meeting relating to key management personnel applies to this resolution. I now move that the remuneration report for the company and its controlling entities for the year ended the 31st of December 2022 be approved and adopted. Direct votes and proxies lodged in relation to this resolution are shown on the screen. Open proxies in favour of the chair of the meeting will be voted for the resolution. Are there any questions or discussion on this motion? I'll now call for a poll to be held on this resolution and ask you to mark your voting paper accordingly. Resolution 2 concerns the re-election of Mr Ben Swain as Director. His fellow directors, John O'Hara and I, recommend his election. I've worked with Ben in his role as a non-executive director and chairman of the Audit and Risk Committee for 2 years, and I've always found him to be a strong contributor at the board level. Ben brings valuable skills and experience to the company, in particular in relation to legal, corporate governance, strong finance and M&A skills, and an extensive understanding of the Tasmanian market and the consumer. I now move that Mr Ben Swain, who was last elected by shareholders on the 21st of July 2020 and retires in accordance with clause 7.1G1 of the company's constitution and being eligible, be re-elected as a director of the company. Direct and proxy votes lodged in relation to this resolution are shown on the screen. Open proxies in favour of the chair of the meeting will be voted for the resolution. Is there any discussion on this motion? Mike.
John, just a question for you, just in regards to Ben's nomination again. I think whilst Ben's at the end of his third-year term now, he's actually served on the board of Tasfoods in various forms since the beginning, back in 2017, 2018?
No, Mike. So I was elected to the board in July of 2020, and that's the first time I came on the board.
Okay. At this present point in time, Tasfoods is operating with 3 directors. I think you can have a maximum of 10 altogether. If I remember correctly, under the Constitution, that the board members have to retire at the end of their 3-year terms. It's compulsory, is that right? And that is next year. Is that the case, John?
I don't think so, is it, Marta?
You retire and then you're able to put yourself up for re-election, which is what's happening right now.
So that's what's happening now, Mike, that my
3 years.
term has come and I've been put up for re-election again.
Yeah, okay. And as I understand it, the other directors are in the same situation as well today. Is that correct?
No.
No. Okay. In terms of, John, you spoke about the business in the past, where it is now, where it's going in the future. Do you see that there needs to be changes in the directors moving forward from here, given the changed circumstances of the business over the last 3 years?
We're always cognisant of the skill set required and the market dynamics, so we regularly take a stock of what we have and we'll replenish the board accordingly if we feel we've got a gap. At the moment, for what we're facing, we feel from a market perspective we are covered. We have the skill sets, but that doesn't say it's a set and forget. We will add to our board accordingly. We're also conscious of the fact we're not BHP. We don't want a board of 7 people. And what we're better off to do is really have our job is to get the key talent in the business, running the business. And as you've seen, there's been substantial change. The confidence for shareholders really is board members meet. I think we've met 19 times in the last year and had an aggressive approach consciously on this business as the moving parts. But we've made substantial change in the business to get the right capability there. And we'll continue to do that. So, yes, we will continue to supplement the board if needed. We'll bring in the right skills and the right experience where it's needed.
And is that your decision as to people coming onto the board, or is that you're open to suggestions?
Yeah, we're always, the way we work, we're open for feedback and involvement in the community. All ideas aren't exclusively owned by us. We want to be that sort of operation. Hopefully the feel we're getting is we're more inclusive and we seek feedback, but we also look at best practice. And so we're always on that. So anyone has any ideas or thoughts, we're open to entertain it.
Thanks, John.
Thank you, mate. Rob?
Yeah, thanks. Do you say in your annual reports what your attendance levels are for all your various board members and directors? Is there a requirement for those directors to visit the sites and actually have a walk around on a regular basis? And if so, can you explain to me what that requirement is and how many times have the directors been to the various Tasfoods sites and had a good in-depth look around?
Yeah, I think I answered it a couple of ways. I think the business, we're a branded business. And so the main thing for the directors here is to understand operations, to have the right skill set at those sites. We've visited those sites. Us repeatedly visiting the sites, other than for meeting the team, doesn't add a lot of effort. We're not experts in the detail of running factories. We understand
Don't you think the board should have somebody on it that's an expert in running these factories?
We do have those skill sets, but in terms of the specifics of it, where our dynamic is in terms of getting the right skills in the team, we appreciate what skills are needed to run it, But we're also cognizant of retailers where we sell our products nationally, where we need to talk with government, whether we need to meet with suppliers. So the role of the board is making sure we touch all those points. And so we do our best to get it right and making sure that we are as best touching the right contact points around the key levers that influence the profitability of the business. We trust Scott and his team, and we're very inclusive in the way we operate in terms of making sure we've got the levers that we can influence clearly identified, and the board's abreast of those.
It does feel like there is a distinct lack of people who have a practical on-ground experience of what's going on in there.
Sure.
Thanks, Mr. Chairman. Robert French, shareholder. I've been coming to these meetings, I think, since about the company started, 2017 or 16, whatever it was. Share price then was about 20 cents, went down to 16 cents. Last year it was 8 cents. I remember speaking last year and suggesting we're coming out of a post-COVID era, going into a high interest rate, high inflation era. It wasn't rocket science to see where we'd be now, going into that environment. I suggested that the company should be broken up, any assets should be sold off, and any returns sent back to the shareholders. Well, obviously that wasn't done. I just think this is a bit like shifting the deck chairs on the Titanic. I think this company's going down. It's just been going down for so long, and the environment's not improving. You're changing things, little things, but the dynamics, I just can't see it ever getting back up again. And I've got a question for Price Waterhouse. Can this company go for another 12 months without raising more funds?
Could I just stop there for a second? We'll take every one of these questions, but I want to just get through the resolutions first. When we get to general business, this one was for Ben's re-election. If we can just handle this one now, we'll have as much time as needed to answer every one of those, and we'll be completely open. But I just want to move through these so we stay focused on the topic. And then we'll move to the next point, and then we can handle any question you have on general business when we get to that point, please. That'd be great. Rob.
John, whilst I appreciate your wanting to move on to the next items in the agenda and move through to the end, I think it's still important that you provide opportunities for people to ask questions.
Sure.
And at this particular point in time, one of the things that you've committed to in your constitution and your board, the word escapes me for the moment, but is gender diversity. You've talked about bringing the right people into the business at senior leadership team. I want to say, as far as Scott's concerned, I think he's done an amazing job under really difficult circumstances, absolutely amazing. So I congratulate him on that, but clearly lack of gender diversity here, lack of gender diversity at senior leadership team level. I want to know what you plan to do about that moving forward as well. The other question, the point I wanted to pick you up on, you talked about bringing the right people into the business at senior leadership team level, and clearly in regards to Scott, what I've said, I think you've done a great job there. What concerns me a little bit though is that as far as the board is concerned, you're sort of lacking what I'd see as being drive and ambition in terms of addressing the company's needs. Now, if I can use an example of that, excuse me, Tasmanian Freight Equalisation Scheme. It's a scheme that's been operating now for nearly 20 years. It was last reworked back in 2012. So the costs or the subsidies that are available to Tasmanian exporters or importers under that scheme is very, very old. It's over 10 years old now. The scheme's currently being looked at again in terms of the subsidies that should apply in 2023, not as they were in 2012. I've done a lot of checking over the last 6 months with the ministers responsible for this scheme. Each of these conversations I say, have you spoken to Tasmanian Foods? And the answer is always no. Now, I would see, if you're representing the interests of the shareholders properly, that sort of government space is where you need to be. But my indication so far is that's not the case. So I think this is a great opportunity for you to improve shareholder value by doing what I did and make half a dozen phone calls to the relevant ministers and find out where they're at with this scheme. Because I would see this is a way of improving shareholder value.
Yep.
So I'd like you to answer that question now about what your plans are moving forward.
No, it's a good comment. Appreciate your thoughts and your backdrop on that, Mike. Our view has been absolutely we're touching every government department, any subsidies, any available grants that we can get. We're also cognizant of the ones that LARC have got and other companies have got, and we have been on that hunt to actually access what we can, and we'll continue to do it. We haven't been successful to date, but we will continue to.
Yeah, it's John, I'm sorry, that's kind of a non-answer. If I can make half a dozen phone calls as a shareholder and ask ministers about whether you've heard from Tasmanian Foods, I would say that the board's got ample time available to it on behalf of the shareholders to make the same phone calls. Not saying to me now, we'll look into it, but you should have been doing this now.
I'm not saying we're going to look into it. I'm saying we have been. I'm just saying that there would not be people you're talking to giving feedback on Tasfoods on what our business is. That's our business with them. So I wouldn't suspect you to have a view of it.
No.
So
you're trying to shift the answer off
No,
to
we're
a
not.
side issue.
We're
My
not.
question is simply, I'm talking about your interaction with government,
Yep.
trying to get government support. One of the things that we've spoken about is exports. Now, I know that you can do exports, but you need the right facility to do it. That, to me, would be something that you should be going to government about, because right now, government is all over anybody that wants to do exporting. But I'm not seeing any action from the board about this. I'm seeing a lot of talk about, we've got these great plans for the products moving forward, and that's the senior leadership team's execution piece. But I'm not seeing what I would expect from a board in terms of dealing with government and trying to get the maximum value from government for this company and for the shareholders.
understand. Thank you, mate. Okay, we'll now move to a poll to be held on the resolution for Ben's re-election and ask that you mark your voting paper accordingly, please. Resolutions 3A to 3C relate to the grant of share appreciation rights to each of the company's non-executive directors. ASX Listing Rule 10.14 requires the company obtain shareholder approval for the issue of securities to a director and an employee incentive scheme. The company is seeking shareholder approval for the proposed grant of performance rights to each director as set out in the resolutions. The rights are proposed under the Tasfoods Limited Rights Plan that was approved by shareholders in the 2021 general meeting. I do not propose to go into further detail as the arrangement is fully covered in the notice of meeting. I would, however, say that Tasfoods is at a critical stage of its life cycle, requiring considerable board support, and is therefore key to align incentives between shareholders, directors and management. The voting exclusions set out in the notice of meeting relating to a person referred to in Listing Rule 10.14.1, 10.14.2 and 10.14.3 who is eligible to participate in the Tasfoods Limited Rights Plan applies to this resolution. I now move Resolution 3A in relation to myself. That approval is given for the purposes of ASX Listing Rule 10.14 and all other purposes for the issue of 2919,708 share appreciation rights to myself, non-executive director of the company under the Tasfoods Limited Rights Plan. The proposed grant is in respect of an exchange of future cash fees for a further future grant of share appreciation rights on the terms and conditions described in the explanatory notes of the meeting. Direct and proxy votes lodged in relation to this resolution are shown on the screen. Open proxies in favour of the chair of the meeting will be voted for the resolution. Are there any questions or discussion? Thank you. I'll now call for a poll to be held on this resolution and ask you to mark your voting paper accordingly. I now move to Resolution 3B in relation to John O'Hara. Approval is given for the purposes of ASX Listing Rule 10.14 and all other purposes for the issue of 2043796 share appreciation rights to John O'Hara, Non-Executive Director of the company, under the Tasfoods Limited Rights Plan. The proposed grant is to be made in respect of the exchange of future cash fees for a future grant of share appreciation rights on the terms and conditions described in the explanatory notes of this notice of meeting. Direct and proxy votes lodged in relation to this resolution are shown on the screen. Open proxies in favour of the chair of the meeting will be voted for the resolution. Are there any questions or discussion on the motion? I now call for a poll to be held on this resolution and ask you to mark your voting paper accordingly. I now move Resolution 3C in relation to Ben Swain. The approval is given for the purposes of ASX Listing Rule 10.14, all other purposes for the issue of 2043796 share appreciation rights to Ben Swain, Non-Executive Director of the company, under the Tasfoods Limited Rights Plan. The proposed grant is to be made in respect of an exchange of future cash fees for a future grant of share appreciation rights on the terms and conditions described in the explanatory notes to this notice of meeting. Direct and proxy votes lodged in relation to this resolution are shown on the screen. Open proxies in favour of the chair of the meeting will be voted for the resolution. Are there any questions or discussion on this motion? I'll now call for a poll to be held on this resolution and ask you to mark your voting paper accordingly. General business. Any other questions as we discussed earlier that shareholders would like to raise or comment on of the board or the auditors, please? Absolutely.
Thanks, Mr. Chairman. You've already heard my comments, but I'd just like to reiterate my question. Like I said, last year I was here, the asset backing for the shares was 8 cents a share. This year it's 4 cents. Share price is 2 cents. I was asked Price Waterhouse, where's this company going and can it survive another 12 months without further capital raising?
Maybe just make a couple of comments to your question, and then if you looked at the broader market, there's probably 30, 40 companies in that market cap under 100 million. And of those, 80% of them are all suffering the same conditions that we face. All the pressures, economic pressures, disruption, COVID, all of that. Either branded product suppliers in a category, struggling to get scale. I want to make it really clear with the shareholders here, if the board thought it wasn't of any hope that we didn't have options, we'd be very clear with the group. We've got no intention of running a long, winding race to the bottom. That's what we do. Well, this group of people in this room have no intention, the board that you're entrusted to lead the company have got no intention of doing that, and we're not going to be the representative that's taken us there. So I want to be very clear, when we say in that report today we're looking at every option, partnership, pet food, taking costs out, we actively are. We have a very clear view on what the significant levers are and the challenges of the business, and we're actively working on it. And when we're in a position to give more outline of what that means and those options, we will do that. And as we've said, we'll be very transparent. So we're not sitting back wasting any time around that, and we're conscious of the need to improve performance, and we're also very cognizant of the journey that the shareholders have been very patient, even before the latest run of the market factors of the last couple of years. So all I can today is to give you some comfort that we are representing you in the best way and turning everything upside down. There's nothing off the table. Well, where we've entered this race with the combination of 5 branded assets with production footprints means what do we have to do is the best thing we could do if it was your own money, shore up the foundations. The group on here that you asked some questions for has been on the board less than 2 years, and we've actually, as a team, 18 months. In that time, we have actually moved this business, turned it upside down. Who knew that COVID would come in on the back half of it, and then on the next half of that would be a wheat price, unprecedented high wheat, soy prices around the world, suffered on Ingham's. Did anyone see the Ingham's earnings results? It's not, but my point is the position of the business, build the foundations. Mike asked some questions about moving into adjacencies. We asked things about, are you looking at export potential? Are we looking at what we can... So what are the 3 big things that we can do without spending a lot of money, reduce the cost base to give us the best chance as we explore those other options? And that's exactly what we're doing. And so we're a small group of people. We are the size that we are as Tasfoods. We are using that with our collective skill set. The group has been in, the confident for you guys, we've been in these other businesses in fights like this. We've seen these through different experiences. John's got significant experience across Sunny Queen eggs, factories of this size, businesses of this size, local businesses, big teams. So we're actually under it, but it cannot be solved in 5 minutes. We have got no intent of running a race here that's going to take 5 years. And when we're able to give some more colour, we'll be back in touch. We'll keep you informed.
Well, Pricewaterhouse are auditors, they're not financial advisors, so they really can't answer that question. I suspect I'll answer it for them. Anyway, Phil Page, I'm a shareholder. Make a comment and I'll ask a question. The director's duty is to run this company for the benefit of the shareholders. I've been to all these AGMs since the company listed, and we hear the same thing all the time, and I echo Mr French's statements that all that's happened is that the share price has gone down, the value of the underlying value of the assets has gone down. It seems to me, almost since inception, that although the directors have a duty to run this company for the benefit of the shareholders, the company is being run only for the benefit of the directors and the employees, because the shareholders have never received a cent out of this because it's never made a profit. Looking at the April update, it's painfully obvious from that although sales have gone up a bit, the input costs are going up even more. So I ask you, Mr Murphy, you've made a declaration on the 27th of February that there are reasonable grounds to believe the company will be able to pay its debts as and when they become due and payable. Looking at the amount of money you have in the bank and the limited overdraft facility you have, I ask you how you can possibly make that declaration when it's painfully obvious that the company is staring at a very large loss for the current year, which only has about a month to go.
So if we didn't think that the cash flow position of the company was improving with the initiatives we've done, and as Scott outlined in his speech, what have we done in the year? We've taken up our prices to customers. We've realised our input costs. So the headwinds of when you get these price increases, we're not immune to any other company in the market. These are the same as we're seeing in other businesses. And so we're able to see that if we didn't think the cash flow position in that period that's now and going forward was reasonable, we wouldn't make that statement. Which we're not going to do.
The other point I make is that having a board of directors of 3, that essentially means that 2 of you can make the decision. So only 2 people are running the strategy of this company, because 2 outvote, 2 is a majority in a board of 3. The board is clearly inadequate. I would have thought you couldn't possibly have a board of less than 5, but I suspect the problem is you mightn't find anybody else who's willing to go on the board, because they'd be joining, as Mr French said, the Titanic, the sinking ship, because that's where the company's going. I mean, it's fanciful to suggest it's going anywhere else. So I echo Mr French's comments. Why don't you just wind it up and sell it for the best you can get? and end the misery. I think last year there was a shareholder raised a question and asked for the shareholders to be put out of their misery. It's just got worse.
Yeah, if we didn't think we had alignment on the board, like we wouldn't move on any option if we thought one of the directors had a view that was a concern, we would actually get input or explore it further. So 3 is the number we've set. If we thought at the moment we'd be more productive and fast to track ourselves by more, we would. So I hear your comment. Thank you.
Yeah, John, I just want to go back to you. I think that was a fantastic question, and it hits the nail on the head. It's a pity that we can't get input from PwC about that particular aspect, or via Ben about what the situation is moving forward. I think, if I remember correctly, the last announcement on the ASX was you had about 2 quarters worth of capital left to go. This year is different. Last year you were capital raising to try and fund yourself. This is not the case right now. You may be looking to do something out of cycle, but right now we can only deal with what it is right now, and this is a desperate situation. I finished off my comments in last year's AGM by saying that even back then it was really clear that you're in for a difficult 12 months, and I urged the board to do something because it was really clear that it was not going to play out well, and I was assured, we've got everything in hand, it's all under control, don't you worry about it, your share price will go up. Clearly we're not there. But this is different this time because you're not raising capital. Unless somebody's going to buy a whole heap of shares right now, we're really struggling to understand how you can keep going forward from here. As I said before, Scott's done some great work. The new products are fantastic. I think it's great that you're getting into a new category, new market segment. Maybe that will pull you out, but that sounds like that revenue is only going to start flowing in Q4. You've got Q3, and you've got the next 6 months to get through with very, very limited cash. I'd put forward the proposition right now that most of us in the room here have actually got more cash in our bank accounts than Tasfoods has. So can you give us some guidance on that, please?
I can only reinforce that we didn't sit in here last year saying everything was okay, so your first statement was incorrect. That's what you said.
What I said to you, what was said
My
to you
talk.
at the time was that, don't worry, things will be fine.
We never said that. We said we actually had a plan to build a foundation. So we just go back to, there was never a speedy turnaround of this business, even pre the global issues. There's no silver bullet. We're cognizant of the fight that's needed in the challenges. We are seeing in recent periods, and as Scott alluded to in his speech, that these things are coming through. We are seeing traction, price increases in the market, rerouted our RTM, reduced loss-making SKUs. There's been, on every front, there's been substantial improvement around the factors that will drive us. That gives us the ballast to be able to have confidence we can meet our short-term objectives. And we're continuing to be confident in that path. We know we're tight, we know that. And we're also, as we said before in our speeches, we're exploring every option that can complement that.
Yeah, I'd suggest that whilst you're giving forward guidance on improved revenue, you also need to be giving guidance on improved cost as well, because we are in an inflationary environment now. The days that operated up until 12 months ago of virtually no inflation, cheap money, are gone. It won't be coming back. Every year now will be 3, 4, 5% cost increases. You need to be achieving that and more to keep the profitability of the business growing. How confident are you of that?
Well, you can only deal with what you can see. So we don't have a crystal ball, and we certainly won't be giving guidance on cost. What we do is manage our supplier relationships and actually look at our ingredients, and there's only a couple of them, the big ones, and manage as best we can with a line of sight as to how we do those better. And we're doing that. And so when things change, we will pivot accordingly. All I'm saying is don't underestimate the substantial amount of foundation work that's been done to improve this business. It is now starting to see the shoots coming through. If we didn't have this period of time with COVID and the global uncertainty, we would be in a much better position. But we are now seeing that coming through. And when we are also with that, outside the operations, looking at new products and looking at other markets and also looking at other options that we can do to give us that flex. And so all I can say at the moment is when we're in a position to say more, we will.
Which leads me to my next question. You tend to communicate with shareholders possibly once a quarter, as required by the ASX. Given the environment that we're in now, I think you should be communicating more often and in more granular form, because clearly the sentiment in the room is that we, as shareholders, are not looking at a rosy picture. You're basically doing the minimum amount that's required as director of the company just to report every quarter. You need to be doing more. You need to provide greater granularity about what you see as being your prospects moving forward, because we are in a difficult situation right now. I told you that last year. We're back here again, but this time it's different. There's no capital raising coming up to fund you out for 12 months. It's just that 400k in the bank and the overdraft. So you need to start working harder on behalf of shareholders to inform us as to what's going on, and you need to spell out a granular action plan about what you and the board are doing in the next quarter, in the next half, in the next 12 months. What boxes will you tick to improve shareholder value in the coming 12 months?
Hear your point.
And if you're not prepared to do that right now, are you prepared to do that?
Well, we're not going to sit here and talk about granularity, but what we'll do is go back.
You're taking these questions quite personally.
No, but I'll just go back to your tone on the questions is probing towards, we've got a team to run a business and we'll update the market. Hopefully you've got from the reports that they're extensive and deep, and we're actually out there. When we can say meaningful things, we will be absolutely meticulous on communicating it. What we're not about is communicating things that we've got a team to get on with the job. We're a small business. We're a smaller team. We don't want a big head office. We don't have that resources. But saying that is not against when we can say things. Our aim is to give you as much clarity and granularity as we can, and we'll do that. We'll take on board your point that we are cognizant of this moving market in the way that now is the time more than ever to do more than less, and we'll take the point and we'll definitely do that. So let us regroup on that and think about what that means. But we hear the point and we're open. We're certainly not about being defensive. What we're about is the fact of giving you as much clarity on this as we can, and action that we're on the big levers that give you confidence we're best managing the shareholder funds as we can.
Thanks, John. Look forward to it.
Other questions? Well, this market's about getting out of the headwinds and actually getting opportunities. But I'd say in the others in the market at the moment, is there one out there at the moment you can see flying in this marketplace that you're going, gee, it's just kicking out of the park? You know, much bigger companies than us, smaller companies than us, all facing the same headwinds. We're cognizant of we came into this battle really challenged in the starting point. We know that. And a lot of the shareholders in this room have been on board much longer than us. We certainly don't want to be here for a long race. It's about giving confidence and giving hope and some initiatives that grow new product development that will make that everyone's world lift. But I just couch it with, in the market, as much as this is frustrating and we've got to relying on your patience more than ever, this is what the market is at the moment. We're seeing prices unprecedented. Input costs, logistics, supply chains, all those dynamics in one hit would have never been seen. So we've been thrown another set of headwinds on top of what was a tough gig. All we're saying is we're starting to see that volatility come out in recent periods, soften, albeit still heightened, and that gives us a hope. So there being no further business, I declare the meeting closed. If you could please place your voting paper in the box passed around by Link Market Services coming now, the representative. The results of the vote will be announced to the ASX, as I said, later today. Thanks for your attendance and questions and input and interest in Tasfoods. And no doubt we'll continue to stay close in support in the year ahead. We now invite you outside the room for some sampling of the Tasfoods products and an opportunity to speak and chat with directors. And thanks again for coming. Good morning.